there in that vision. Let's bring in Markus Helsing of Alpha Broking now. He is in our Melbourne studio for more, and it has been all about the oil price over the last few weeks. Markus, what do you make of the recent news? Russia obviously saying they'll get on board with OPEC as well. Is that a surprise to you?
Well, no, I mean, they're all, as we all know, hurting quite substantially over now nearly 2 years. And I think, as I said previously, to me, what we have now, we have OPEC not only talking, they're starting to put the fight out there. So what that does, it puts basically a floor price onto oil and natural gas, in our view. And that is something very handy to have if you're in the trading or investing game. So we really believe, as with gold and silver, we like them long-term very much. Things don't go in straight lines. And oil now, as well as natural gas, might just correct a little bit. May I say, technically speaking, natural gas has made some key breaks to the upside, and as has oil. It's just it's a matter of holding these gains, and oil so far failed to do so. So look, we think it's just now a classical case of a corrective cycle that now oil entered together with following gold, and that might maybe bring oil back towards the $48 level, if not a bit lower. We see it as a very opportune type of cycle to enter more oil-related stocks and natural, basically physical or future positions in oil itself.
Markus, it's Rudy Philipek van Dijk from F1 Arena. Good afternoon, Markus.
Hi, Rudy.
Listen,
how's things?
Fantastically, of course. I'm still waiting for the $5,000 mark for the gold, though, but I might be patient on that one.
Well.
But the other thing, Markus, is the question I have is, I saw Deutsche Bank earlier this week. They basically have quite a complicated strategy for year-end. They're basically long oil, short gold, and obviously that's what you do with future markets. But I'm interested with all the events that are coming up, like the presidential elections, Federal Reserve meeting, Italy, etc., etc. Do you have a specific strategy to weather out volatility between now and year-end?
Well, you might have a laugh, but the Mexican peso was actually a strategy that was recommended in The Economist only a few weeks ago. Obviously, a few hedge funds took that more seriously, and that was one of the strategies to take on board, and so far it works very nicely. But more conservatively, I think we all know financial markets do like stability, and I think Robert De Niro summed up Hillary's opponent very nicely, and I think I probably would have had a few more colourful additional words to add. But to me, we believe that potentially Hillary Clinton could win by a landslide not seen by Roosevelt in the 30s. So the market, in our view, is starting to build that in particularly and noticeably in the US dollar. So you have a combination of a confidence that we have a stability going forward. This is, of course, still a certain punt factor to it. And you add on the Federal Reserve with their tightening, which is more or less a bagger, we would say, of another 0.25% either shortly or in December. So really, we feel when it comes to oil and gold and the US dollar, these are in a moment, that is the big stuff. I mean, to us, the US dollar is the decider. We long-term feel the US dollar still could revisit lows on the broad index that we have seen a few years ago. Obviously, in a moment, that's not the case. As a matter of fact, the US dollar is well supported and looks very strong and could easily advance another 5%. And that will keep all these commodities in check. And that's why we think over the next 4 to 8 weeks, that could bring opportunities. Also, as you mentioned, Rudy, with the uncertainty, of course, the US election and all that, that might be just about the timing where you might find oil, gold and related stocks to be at extreme opportune levels to have a second go at it, or if someone is not placed yet, to really advance in that. We think that is still the long-term trade to look at, other than natural gas.
What do you think, Rudy, of those comments?
Well, I think if I summarize the comments, is expect weakness now and use it as a buying opportunity for gains later. Markus, is that sort of my right summation?
Correct.
Yeah.
Correct.
Adam, what do you think when it comes to sort of the US election and impacts on commodities, US dollar? I mean, it's a tough one to call.
It certainly is. And, you know, you take a broader look on most of the commodities, silver and all these kinds of things, they sort of are following. It's a tough one. And I'm not a huge commodity expert, so but you know, Markus seems to have got his finger on the pulse.
Yeah, well, we'll ask Markus about silver as well, because Markus, we know your views on gold. You've been very clear on the rally you're expecting. I'm assuming you haven't sort of shifted from that. What about silver?
Well, look, no one is perfect, as we all know. There's no perfect world, and timing is a beautiful thing, and it takes many to master, a few lifetimes to master it, maybe. Look, it's all about being there when it counts and getting the macro right, and we're big believers in averaging yourself in a position that you really believe in. So silver, gold could probably, to us, hit back towards 1220, maybe even a break of 1200, 1180. That would probably fool quite a few into a potential major break. We think that would be opportune, and silver could see something with a 16 in front of it. We think that's probably the max. At the end of the day, nothing's changed in the big picture, but a little bit in the short term. The US dollar is too dominant, and it will depress and keep a pressure on these commodities at least over the next 4 to 8 weeks, in our view.
But Markus, it's really, again, I mean, it's probably a fair comment to make here that if gold is under pressure, then silver will be even more under pressure. So I'm quite intrigued by the fact that you think that silver won't fall further than $16. Surely it can fall further if gold has that pressure that you just described.
Well, of course it can, but I mean, as we all know, Rudy, you've got to have a view, and we analyse these things, and our view is that the $16 plus level in silver will hold. With every view, every now and then you have to revise things, but we just think the technical picture doesn't look that horrible. We had a big washout that's normally followed by a secondary washout, and there could be worse another dollar movement in silver. But I mean, historically, let's not forget, silver has also moved a lot more dramatically already, and has sold off a lot more dramatically than gold. I mean, you have a look at platinum that mirrors the silver move a lot more than gold. So I would think silver in the $16 territory is really good value. Or for basically between $16 and $17.
Moving back to US stock indices, I just want to get your view on them, because you said they're looking tired. I mean, in terms of the gains they've been making, it's been pretty solid. Do you see a pullback then? Markus? That one's for you. That one's for you.
Yeah, sorry. I thought it was addressed to Rudy. Look, could you please ask me again? Sorry.
In terms of stock indices in the US, you said they're looking a little tired?
Well, that is the thing that really worries us. I mean, we just really don't see the big fear factor out there yet. But if you look at markets, it's just the Nasdaq that's just been a tremendous performer. If you look at Russell 2000, there's been enormous performance, and we really believe in a moment they look very tired. Is it just going to be a correction, the beginning of something bigger? We don't know yet. I mean, the fact that Euro-US is now moving again, it just feels to us there is something coming. If you look at the trade figures of China, that just were released today, this sort of volatility, this is not really supporting an ongoing bull market at this point in time, in our view. So there's definitely a very big chance to see some sort of a correction coming up into the election. If that becomes anything bigger, well, we believe after 7 years plus of money printing rally in the stock market, we are running into the finale. If that is now or in a year or two, we don't know, but we believe it's getting very hot out there.
And Adam, I mean, US reporting season's kicked off. I mean, only with just a couple of companies so far. Alcoa, obviously, the first one. I mean, is this going to sort of direct signal, do you think, for the market going forward, for the US market at least?
Well, I agree with Markus. It's been very, very hot, and you know, it does warrant some cautiousness when you're going into these things. We've stopped buying the US indexes for the ETFs, as we spoke about before. We've slowed down on that. We still think that there's a lot more to go. I think interest rates are going to be the big thing, and whether that comes early this year or late this year or early next year, I think that's going to be the telltale sign. But I do think that there is it's had a very, very good run, and it's buyer beware at the moment, definitely.
What do you think, Rudy?
And in addition to that, I think a lot of investors are noticing more weakness in their portfolios than is obvious now, because you see that risk appetite is retreating. Right? That's a fact.
Absolutely.
All right, Markus, we will leave it there with you for another day. Appreciate your time, though, and your insights, as always.
Thank you, Ingrid.
Markus Helsing there from Alpha Broking out of Melbourne.